Alright, so here we are. I'm going to talk about volume to price action, and how we can confirm uh, potential trends and beginnings of trends, endings of trends with volume and price. So the key things about volume and price action is if they match, then it's generally correct. So low spread. So spread is just the open to the close. Low spread, low volume. It's good. Doji, big volume. It's an anomaly, right? It's not something's not right. Uh, Bigger volume there, decent spread. Low volume, small spread. So that's pretty good. So when you have low volume, small spread, and then ascending volume and a bigger spread, then there's a confirmation in price action. Okay, so that's the confirmation, right? That price action to volume action is true. Then your first signal in this spot here is decent volume and a doji. So there's something telling you there that something's not right. Now it might be red, okay? So there was might have closed red, but there was clearly a lot of buying pressure there, even though it was a bearish candle. All right, so bearish and bullish candles can give us plenty of information, especially in this instance here. So we've come from a distribution phase, so or downtrend, right? So lower highs. Doesn't necessarily have to be lower lows, but lower highs. And then we come to this part here, right? So you got distributions in effect, and as price action moves down, volume's ascending. So that's tick. Price action moves down, volume ascends, tick. So it's telling you that price is moving down before this dip, right? So now you're looking for entries, right? So you're looking for entries in shorts. You've got one confirmation, two confirmation. So you'd be looking for a short here, preferably on that inverted hammer. Inverted hammer, great candle, Okay. Now you got small spread, small volume. Okay. Bigger spread, bigger volume. Tick. Might be excessive for a candle like that, but buying pressure it has now been liquidated. Okay, so there's no more buyers, and then we get a big bearish engulfing and a drop like that. So we're at a 5% drop. So if you're in on that inverted hammer, okay, so you're in on the close, and you're at 6.2%. So that's at 10x 60%, 20x 120%. Okay, right. Obviously, if you're not out at the bottom, then you definitely get out on a hammer, all right, on a bullish hammer, okay, because the buying pressure's come up. So, and if you want to analyze the volume in this candle, then you're gonna have to break down the time to a small time frame. But now the hours enough. That's enough. Just means that you gotta wait for confirmations. Okay, so you've had that push, you got a hammer, you got a high, and then you come to this consolidation period here, right? So looking at it's a couple of hours, but there's already some inconsistencies. So one, we get price action moving up. You get nice volume there, small spread. So it tells you that there's an anomaly, right? And in this case, it's a bullish anomaly. So there's going to be a push up because everybody's looking to take profits now, right? So once people start taking profits from shorts or closing losses, and people start buying, and it pushes up the price, especially when you close shorts. Because when you close shorts, the short sellers are actually buying. It's even I have a bit of trouble working around in my head, because you're borrowing contracts at a higher price and you're selling them at a lower price, and you're buying them. That's why when you sell a short, you'll see the price go up. So if people short sellers are in, they're taking profits, and they're pushing the price up when you sell your shorts. Okay, so the bulls are buying the shorts, right? And anybody who's getting liquidated is pushing the price up as well. If they're closing their position, pushing the price up. So that gives us our high. We get a bearish engulfing there. Okay, so we've got another push. You know, probably people here like, oh yeah, I've caught that. Oh fuck, all right, I better get out now. Right, so there's a little bit of panic selling. A little bit of push up. Okay, and then you've got volume ascending, price dropping. So that's a tick. So when volume moves with price action, it's a tick. And then you got your anomaly here, and you know, volume failing to push down, and then another hammer. Okay, so hammer, bullish engulfing, doji type candle, weak bearish pressure, and bullish. And if it's depending on your strategy, you know, maybe you do your base like that. So you rally up, base drop, a little bit of a horseshoe there, and you know, potentially entering off this level here. You know, you can align it with something there. Otherwise, you know, push up and you know, potentially looking for entries on there. Okay, so I like doing the bases, yeah, right. So that way, you know, you're pushing up, you're consolidating, and then you're just looking to buy on this line and only that line. Once you've got consolidating price action, okay, just look to buy at the lowest point, wherever the lowest point is, and you know, using previous structure, put your stop loss. All right, but you got to make sure that you have that changing market structure. Okay, and then pretty much off here, bullish volume. So above average with a bullish engulfing, it's pretty good. Right, so the strong green color, so volume-based color bars. So that's strong bullish candle. Right now, it's there was barely a wick here, so it was pretty much entirely owned by the bulls, and there was 1.229 million volume, which is very strong. So it's a very strong candle. So you've broken out of this consolidation phase here. So you've essentially had the breakout here, you know, and then you use this candle as a reference, right? So this candle is your volume back candle as your base for this part of the consolidation period, right? And then you're just looking for the breakout of here, and there you go, there it is. Okay, so you get that double top there. That's sort of where you're out. But you know, you sort of you'd rather be on the higher low, so you can use fibs. Okay, there you go, 618, nice. Right, so there's that really green candle there. So there's your base. So your base on the volume of that candle, right, that's your volume backed support, right? Lines up with 618, so that's where you're taking your long positions from, and you can use the fixed range profile. It should be about the same, because that's the highest volume in this entire period, right? So now I've just given you a strategy here, you know, so you look for that higher volume candle, right, and that's your base. So now you've got a higher probability of 61.8 working, okay, especially at the end of a downtrend. So end of a downtrend with a change of market structure, low, low, high, high, low, right, volume backed support at 618, stop loss there at the 78.6. Okay, and then you know you're looking to buy there, all right. Then once you're in that trade, it's just about managing the trade. Okay, So you're up here, right? Draw your lines like that, and draw your little base there. So you can visually see it, right? So you're drawing it in. You're drawing it in. You can't let your mind think. Like, you can't let your mind think. You have to be objective. So you draw everything you can in. All right. High, 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 high. Yep. See, some people like to do wicks and bodies or candles as a high, high and a high, low. What I like to do is I like to just draw a line. That entire part, that all of that is a higher low. The higher low, higher low, because I know on a higher time frame, right? On a higher time frame, that's what it's going to look like. Okay. So you gotta think like that. What's happening on the higher time frames? I'm using the lower time frames. What does it look like? What does it look like on a daily? What does it look like on a 4 hour, 3 hour, 2 hour? There's traders use all types of different times. Okay. Now you're approaching your fib levels. So, and then there's your volume backed line there, high volume here, right? You got a high volume sell off here because it is the 100 or the 0 line here, right? But now when I see a candle like that, you gotta see where did the open happen and where did the close happen. So it's about 50%. So it's sort of an indecision candle, right? So you got about say that's 33 and a third. That's 33 and a third, and that's 33 and a third. So you're in the middle. It's indecision. Even though it's a high volume candle, potential reversal. We're still trending up, and this hasn't been broken. Okay, if it closed in the bottom 33 and a third, then I'd be okay. We could, that's an inverted hammer, and I'd probably be looking to maybe one last push up and then we'll get out. All right. So candles and volume go hand in hand, right? So pushing up, volume, pushing up, volume up. All right. Now there's your double top. There's your doji, high sell off. There's a hanging man, high sell off. Right. Now without this, you're going to have to really look at the volume here. Okay, so there's your warning signals, especially at the 618. Like, come on, we've made some decent money now, right? Look to get out. So whether it's to take profit at the 618 or not. All right, double top, bang. Right, how to change your market structure. Okay, so but we're still sort of at this level as well. Broken under, which says to me that weakness, but we get that sort of one last run up. No, that's it. Okay. All right. So 1, 2. Now you can see hanging man at the top, right? And volume is descending as price is moving down. So that just means that there could be a little bit of weakness. Okay. Which it does. Pauses. Volume ascends and ascends. So it corrects. Bang. Okay. Gets caught here. So you got these two candles, confirming price action, but then there's your anomaly. All right. It's a bullish top doji, but it closed in the top of the 33rd of the candle. Then you got a hammer, hammer on that previous sort of volume back support. Okay, well, we've got a high probability moving up here. So my mindset will probably still be a bit, probably, even though I've sold here, it's dropped, it'll probably still be looking for longs, because you got, you just won a trade, now you're looking for longs. You got that excitement, which captures your mindset to only see sort of one thing, which is not bad because you'll probably be able to catch this, ride it back up, and the it's a strong volume candle there. Strong volume candle here, so still bullish pressure. No reason to get out, right? And if you didn't get out there and you held in, you got one last chance to get out here, right? And you can sort of see that as price action moves up, volume moves down. Okay, so strong volume, medium, 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 weak, weak, strong. Okay, so it's just one last push. Right. So imagine people have shorted from here. Okay, they're coming up here, you know, and people are just jumping the gun, short, short, short. Bulls push it up, liquidate them, and send the price down. Okay, so that's and then you got price volume, low volume here, ascending volume. So price action and volume are going in the right direction, and ascending volume again. Now the spread of this candle is less than this one, but higher than this one. So you know it says to me that we could be slowing down. We do, but we do get a lower high. Okay. Volume is it's low volume moving up with price action moving up, and the spread's not good. So low volume, decent spread, low volume, small spread. So you know a lot of sellers, higher volume and a smaller spread again. So it's weakness, and then bang, higher volume, drop. Then you got 1, 2, 3. So you got volume ascending as price action's moving down. Okay, so that gives you another confirmation. So you got confirmation 1 and confirmation 2. So 1, 2, 3, 1, 2, 3. Okay, that price is moving down. So now if you want, you know, you just do your bases. So your base, right, base, base. Okay, and there we go, moving down. There's an extra comp. So now you got, look at that. So two confirmations, price moving down, volume moving up, price moving down, volume moving up. Small volume, big, medium, big, small, medium, big. Okay, tick. And look at that, we're back at the 38.2. The bulls come back. Hammer, heavy volume, easy reversal. Okay, hammer, heavy volume is an easy reversal. Now, when you get a bearish candle like this and a bullish candle like that, it's a hammer, weak hammer, but above average. Okay, that's a sign that there could be a reversal. Don't know how much it will be. It could be just a pullback, continuation. In this case, it is. But it also signals the potential. You know, all right, look, maybe take 50% of profit. You know, you're gonna have to work that strategy out for yourself. So you got the hammer, you got that pullback here, but that's a strong. That's massive, you know, 1.72 million volume. Nothing has competed with that in the downtrend right now. So, you know, reversal, easy, bang. It's volume starts to sort of decline as the price moves up. Get that one sort of push there. So, and this could be easily assisted. See, volume is, you know, the buyers, the sellers, the shorts, right? So if your shorts are up there, when your shorts take profit, it pushes price up more because it's giving, it's a demand, and then you know it's like you've sold something expensive cheap because it's the reverse, and then you get paid the difference. So then it pushes price up. So if shorts are taking profit and bulls are buying, it's going to be easy to push this up, and it doesn't need that much volume if there's no sellers or if there's no short sellers. All right. So then we come back here, and we've got a inverted hammer, lower volume at a sort of distribution zone. and resistance here. A supply zone, potential supply, and down it goes again. So price action moves down, volume moves up, correct, tick, and then you got a little base here, and we're on that continuation down. Okay, so drop, base, drop, heavy sellers there, right? Or take profits. You know, it could be a mixture of both, but you do have that confirmation as volumes moving down, price action moving down, volumes moving up, which is correct. Volumes moving down as price is moving up, and then you got weak, so continuation, right? Trying to recover, continuation, trying to recover, continuation. This is the structure for potential reversal. Strong buyback here. Right, now you've got price action moving down, volume descending. Okay, so yeah, look, bearish engulfing, hammer, potential reversal. Right, one last push down, and we're getting back to that area before. So getting into the demand zone, right? This is the demand zone. So where that wick is, that's strong buying pressure. Okay, I'd have to go to a lower time frame, and then you'll be able to see how much buying pressure that this candle was. So that's why the wicks are very important in relation to volume. If it's high volume, and you know it's a decent spread here, but there is a huge wick there. There's clearly it's 4.152 million volume. That's massive. I think, you know, and you got 5 million there. So, you know, there's clearly an area of demand here, and that's what I look for when I go for demand zones. I want high volume, and I want, you know, small, big candles at a sort of reversal point, and that's where I'm drawing my demand zone. So my demand zone would be here. Right. Okay, so that's my demand zone from 286 to 294, and every fresh demand zone is always revisited. So we get close here, and it gets closer and closer until we start to get into that demand zone. Right, there's huge selling pressure in here and here. Right, so it's eaten up, and bang. Once the selling pressure's gone, the shorts have taken profit, the buyers are buying. So if shorts take profit and buyers buy, and there's no selling pressure, you're going to get this huge, massive, bullish engulfing in a demand zone. Okay, and bang, bang, one last push, right? So you know, people probably taking weak hands, taking quick profits, and now the thing about this candle here and this play is, you know, let's just say I've got, you know, let's just say I got $10 million. So I've got $10 million, and I've bought here. I've, you know, just bought like all the pullbacks. So buy. So I'm not buying in one hit, right? Majority of my buys might have been in here, and then I'm putting a bit in here and a bit in there. Okay, so now I've got my positions all over the place. My average buying is probably up, so I want to make sure that my capital is protected. And how best to do that is to sell, right? So I'll wait here. I'll wait for other people to, you know, load up on buying positions, and then I'm going to market sell, you know, maybe 25%. Right, so I'm at some decent profit. Market sell 25%. There's not enough liquidity to get to fulfill my market sell. So price goes down, and it goes down really quick to pick up liquidity to be able to, you know, give my sells to the buyers. Once I've taken out anyone who's got a long position on up here that's leveraged, they're now liquidated. Now the accumulation starts again, and now it's all small orders, right? So they're all small orders. So nobody can sell a big chunk in here on me, right? And that's a real big tactic. It's a whale tactic. It's an institutional tactic. They want to make sure that nobody's going to rug pull them. They are the rug pullers, all right. So this play here is the one where it sets people, gives people uncertainty because they're like, oh fuck, are we still going to head down? I've just gone long. I'll just close my position. That's what they want you to do. These guys want you to, be in uncertainty and fear, and then price starts to move up, and then you're like, oh my god, I fucking missed it. It's fucking all the way up here, and you're like, what the fuck did I do? Right, that's it. That's what they want to do. They don't want you to be able to sell on them. They have to be able to sell on you. Simple as that. So we've got our triangle here, right? Okay, so there's our triangle. If it wasn't there, it'd be here before the break. Okay, so there's a sort of triangle, right? Tries to break, move it over, breaks down. Okay, get the wicks. All right. So now an ascending triangle. An ascending triangle is an accumulation structure, right? And demand zone is where you can potentially get the best price. Simple as that, right? So, and a changing market structure, high low. So if some people do this: lower low, higher high, higher low, higher high, equal high, lower high. But if you do your base, right? There's your base. It closes up, drops below, bang, pushes back up, closes in the zone. So now you're closed in the zone, all right? Base. Okay, base. So now you've got an area that's a lower low, an area that's the higher high, an area that's the lower low. Right now it's an ascending triangle. Okay, so we've had this huge volume backed candle, right? And we can do this. We can do this to get the structure. Okay, so our point of control is up here. So most of the orders happened here, even though there's a huge candle there, right? So our high is tick if we wanted to use that. So our point of control there, and if we move it over to here, there we go. So our ascending triangle is saying that most of the volume, point of control, is here, which is good because we want volume. We want volume and price action to be at the top of the ascending triangle, because that means that people are willing to push it up. All right. Now, if we analyze this structure here, what conformations do we get? Okay, so we have volume ascending. Not so much positive spreads here. That's positive spread, negative, positive, but it is an inverted hammer, so there was clearly a lot of selling pressure in here. But regardless, bulls won in the ascending triangle, right? You got an easy push up there, so now there's no selling pressure. So anybody who thinks that the price is going down are probably gone now, right? Push up, doji, push up, pull back, high volume. So there was clearly some more selling pressure, potentially from here or over here. Who knows what time it is, what part of the world is waking up. There's so much to sort of think about. And then we've got another really high volume candle that was tried to be pushed down, closed bullish, and then you got your bearish type doji closing in the middle again. So not really worried about it. Then you got these two candles here, right? Spread to volume tick, spread to volume tick. Your first initial structure that, yep, we're going to push up. Now it attempts to break out, right? It comes back in, so there wasn't no retest, and then we get an ascending volume 1, 2, 3. So which is I think it's 3 inside up, or but this is a bullish structure and a bullish candle pattern structure. All right, so you want that bearish here, you want a bullish candle like that, and then you want a bullish candle like this, and you want it to close above the bearish candle. Okay, right. So now you've got ascending volume, so weak volume to the downside. So there's clearly that there's no interest to push that price down, and then you got a reversal here. Okay, so that's your tick, and then you got a high volume inverted hammer here. So people are just sort of like unsure. Then you got the break. Now if you broke it down on small time frame, this would be a break and retest in 2 candles. It's a break and retest. People are looking for like 5, 10, 15 candles to break this massive break and retest and go. But really, it's just 2 candles, and if you go in a smaller time frame, you're going to see that shoe, that break, retest, and then it go. So, okay, nice low volume, easy moving up. So there's easy pressure to move up. The price action comes back up, hits that 27.2, right? There's some strong selling pressure in here in comparison to the entire run. So that's where my exit would be. And if I saw the 27.2, I'd be out here, or I'd just move my stop loss into profit. Potentially at the base. Okay, that's it. Right. So if it takes, it takes. If it doesn't, and it keeps going. Good. In this case, it doesn't. So that's your first signal. Actually, that doji there, high volume doji, is one signal to sort of say, all right, we could be coming to a reversal, right? It's come up on the trend. Price action has moved up on low volume, okay? Higher volume, medium volume here, above average, higher volume to the downside, and then lower volume in comparison to this, right? Bigger spread, low volume anomaly, and big spread, high volume engulfing tick, right? Bearish engulfing, high volume tick. If it was a bearish engulfing, low volume, continuation. All right. So price moving down, volume moving up. Next tick, price moving down again. So closed lower, volume tick. Okay, and then the cycle begins. High volume down, low volume, small spread with low volume. So a little bit of pullback. Okay, low volume, price action moving up. No interest to push price up. Small spread, higher volume, and then easy push down, high volume there, and then we're back to where we begin. All right. So now I'm look, we've had a high volume candle there, right? But it's engulfed by this candle, so I'm tipping. We'll potentially pull back some more, right? So price action has moved down, volume's moved down, and we're just. But this bearish pressure here has engulfed the buyers here, so it tells me that there's potentially more sellers to go. So that's a bit about volume. So just to recap, okay, so volume moving up, price up equals plus, right? Tick. All right. Volume down, price down equals minus. Volume plus, price down equals anomaly. So you're going to have to assess the structure. So So assess structure, you know, reversal, pullback, depending on what time frame, you know, pullback, you know, no interest in price, you know, what have I done here? I've done it the wrong way. Alright, so let's have a look. So volumes ascending, price is ascending, then price is going to move up. If volume is descending and price is moving up, then it's an anomaly. So potential pullback. So it's downtrending, and then price starts to move up as volume descends. Then it's probably just a pullback, or it's an anomaly. So you gotta examine that. If price is ascending and if volume is ascending and price is moving down, then it's correct, downtrend, most likely. Uptrend, right? And then if volumes minus and price is minus, then it equals a weakness. So if it's in an uptrend, it's just a pullback. Pullback if in uptrend. Okay, so there's some rules. Maybe I'll do a little table, put it like that. So volume ascending. Okay, volume ascending, price moving up. Okay, and volume ascending and pricing moving down. Bang bang. Price moving up, volume moving down, pullback. And where's the pullback for? There's not really one. Oh, there is sort of here. Volume was descending down, but that candle there really wrecks the flow. But you know, that's how it goes in trading. So price action was down, but the last two candles were low volume, so or descending volume. So buyers clearly were in here, really trying to break out of this ascending triangle here. So they've loaded up. Buyers have loaded up while sellers have tried to really push it down. Otherwise, it should have just been, you know, in a perfect world, it'd just be descending volume, descending candles, descending volume, and then push up like that. So I hope that sort of covers volume for now. Right now, there's on comp, there's nothing sort of telling me that yeah, we're going up. Like yeah, there was that buy up here, but it's just engulfed. Volumes engulfed this. So you know, to me, it says that the sellers are in control still. Until I get a real good hammer, maybe 618, 786, or in the zone of 88.6 and 78.6. You know, so it's just I've just put that as a zone, right? Like a demand zone for fibs. or potentially retesting the demand zone down here. You know, if I'm looking for something, and that's yeah, that's a wrap on volume.